Good afternoon. Good afternoon. I'm Shyam Prasad, Secretary in Bangalore Chamber of Industry and Commerce. I welcome all of you for today's panel discussion on changing role of the independent directors. And today's the panelists are Ms. Vidya Rajarao, founder of Fraudopedia Private Limited, Dr. K.S. Ravichandran, Managing Partner, CSR and Company, Mr. D. Ramprasad is the co-chairman of Corporate and Economic Affairs Committee of BCIC and also a practice head at ASC and Associates. I welcome all the panelists, and today's panel discussion is moderated by Dr. K.V. Om Prakash. He is the chairman of Corporate and Economic Affairs and Legal Expert Committee of BCIC and advocate and founder director of Consultancy Private Limited. It's my privilege to introduce Ms. Vidya Rajarao. Ms. Vidya Rajarao is a chartered accountant from the Institute of Chartered Accountants of India and a certified fraud examiner from the Association of Certified Fraud Examiners, the world's largest anti-fraud organization, USA. Ms. Rajarao is the chair audit committee and an independent director at BIMACC Aerospace and Manufacturing Limited, a global leader in high precision engineering solutions and RSP Transmissions India Limited, a fast-growing global engineering organization in the automobile sector. Currently an entrepreneur, Ms. Rajarao is the founder of a startup venture, Fraudopedia, that aims to equip stakeholders such as members of the board and KMPs with the tools to prevent, detect, and combat fraud in India. Fraudopedia's flagship product, Vidya, enables members of the board of directors to discharge their fiduciary duties, responsibility, and obligations effectively, and by empowering them to fulfill their compliance obligation under Section 134(5) of the Companies Act and demonstrate diligence through time-stamped audit trails of governance actions. Ms. Rajarao was the first Indian to be elected to the board of Association of Certified Fraud Examiners, the world's largest anti-fraud organization, and was vice chair during 2018. Ms. Rajarao was one of the 7 members of the Technical Advisory Committee, National Financial Reporting Authority during 2018-20 that was constituted by the Government of India to assist and advise the executive body of NFRA on drafts of accounting and auditing standards. Ms. Rajarao is the only Indian to appear continuously in the international World Health Organizations of arbitration expert witnesses for more than 10 consecutive years. Ms. Rajarao holds substantial investigative forensic and risk consulting experience in USA and India. She has testified before eminent Supreme Court justice in both domestic and international arbitrations and the International Court of Justice. She brings over 30 years of white-collar crime investigations for forensic accounting and risk consulting experience, often working in multicultural environments from teams across countries. Welcome, Ms. Vidya.
Thank you.
Now I request our chairman, Dr. K.V. Om Prakash, to make his opening remarks.
Good evening, all. Welcome to this wonderful session, a panel discussion on changing role of independent director. So this is a topic which has always been a contemporary topic and a topic of interest to all the practitioners, those who aspire to become an independent director, and those who are already as an independent director. They would really know what is the role they are going to play and what they have been playing, where their focus is required, how the startups look at them, what value proposition they bring to the table. So with these few words, I welcome all of you who have joined this panel discussion on changing role of independent director. And we have 3 panelists here. Already Vidya Rajarao has been introduced by Shyam Prasad. I would introduce Dr. K.S. Ravichandran, who is online. He is based out of Coimbatore. Dr. K.S. Ravichandran, an accomplished corporate law governance expert with more than 3 decades of core practice, is the author of book on CSR and ESG published by LexisNexis, second edition of which under print. His firm KSR and Company, Secretaries LLP, Bangalore, a member of BCIC, has practical experience in all aspects and essential attributes of ESG. His slogan is 5R: reduce, reclaim, recycle, reuse, recover. So he's more than a professional. I think he is an author. On the right-hand side, I have Mr. B. Ram Prasad, who is the co-chair of this committee as well. Ram Prasad is the practice head of Bangalore office and brings with him about 3 decades of experience in both corporate and advisory role. A commerce graduate and a merit ranker of the Institute of Chartered Accountants of India, Ram Prasad is also certified SAP consultant from Sapien College, Chennai. He has vast experience in assurance, taxation, M&A, besides handling treasury function. His professional award stands testament to his outstanding caliber and leadership abilities. During his tenure with the Big Four, he had the added responsibility of developing, learning and educating workshops and a regular faculty for their assurance training programs. With characteristic self-belief, Ram Prasad also finds time to pursue his passion for Hindu philosophy and classical music. Here we have the panel members, Dr. Ram Prasad, on left-hand side, Vidya, Rajarao, and on this screen we have K.S. Ravichandran. Mr. Ravichandran, can you wish? Are you mute?
I think so. Yeah, good evening.
Dr. K.S., yeah, we are able to hear you.
Yes.
Is that main screen you?
Are you able to speak?
Am I audible?
We're not able to hear you.
Yes. Not able to.
Some network issue.
What happened?
Network issue, I think.
He's dropped out, I think.
Am I audible? I'm speaking from a public place.
He's there, okay.
Mr. Ravichandran, good afternoon.
Very good
Sir, we
afternoon.
cannot
good
hear
evening.
you, sir. So you have to say a few words so we can test that you can hear us and we can hear you.
Can you hear us
Yes,
now?
I was trying.
Okay. So
Can you hear
I will
us?
start my
I think they are not able to hear.
topic.
Shyam,
And I would-
are you able to hear?
Curate this entire program by posting few questions to the speakers here, the panelists. Madam, you as an independent director, how do you see that you can bring value proposition, especially for the startups? And what would the main steps you take before joining them as an independent director?
Thank you. Very good afternoon and thank you very much for having me on the panel. So I think, this experience is very new to me and the subject is one which is very close to my heart because BIMACC Aerospace, as many of you may have noted, they just listed last December. So it's almost a year now, but it feels like just a couple of months ago. So they were a first generation group of entrepreneurs involved in precision engineering in the aerospace and defense industry. They required significant hand-holding because listing is not a joke. So there are significant regulatory constraints and they were going from using, private funds, maybe they had a Series A, then they went straight away into an IPO with almost 400 crores. Their issue was oversubscribed, especially given, Operation Sindoor, there was significant traction on the aerospace and defense industry. And they had many of their clients are in the aviation industry, whether it's Airbus, Boeing, the OEMs and the engine manufacturers. So significant contractual requirements in addition to regulatory compliance. So they required a lot of hand-holding in terms of the process, institutionalizing internal controls. Starting with what is the expectation of having an independent board? So that was the first time they had a board which was independent. Prior to that, there were 4 promoters who were basically running the company. So they added 4 more independent directors. So the first education to them was, how do you interact with board members? What kind of board members you need for your industry? Do you want industry expertise? Do you need strategy expertise? Do you need someone with accounting, regulatory?
So you were involved in
compliance?
structuring the board itself.
Was involved in, yes, along with other board members, evaluating what board members would be beneficial for this company as they grow. Because the IPO was just the first step. It's not the end, it is the beginning. So for them to have growth for the next 10 years, what is their visibility and what kind of board members they need, which will support their vision. So we started with that first, and then handhold them through having proper internal controls, selecting an internal auditor. So the internal auditor they had prior was a much smaller firm who was adequate for their needs then. But once you go into an IPO, the expectations from the SEBI LODR and the expectations from an external auditor is much more, and from a retail investor is quite substantial. So we had to go towards selecting an internal auditor. What is the mandate for internal audit? What is the charter which an internal audit should have, and does it align with the charter of the audit committee? So very basic processes, governance mechanisms, controls, building the capacity in the accounting department and finance department of the company. How many, do you have enough chartered accountants to deal with the kind of, you have to close the books almost every quarter. You need to have an investor relations team. You need a company secretarial team. You need a compliance team. You need internal audit. And these were all engineers, right? I mean, their strength is really in their engineering and precision engineering domain. And they've delivered substantial revenue because they have absolutely zero error. Their products require such precision engineering because they do toolkits for aviation engine manufacturers. So they cannot have even a 0.001% error. So from engineering, without compromising on the engineering quality, to add capacity and institutions and framework which will help and not hinder the engineering precision which they have. So to build the finance function, to choose the right internal auditor. I mean, they had a good external auditor, but to complement them with enough controls, whether they have the right processes for revenue recognition, presentation of financial statements, secretarial audit. So it was a lot of hand-holding. So it is a very enriching experience. And to your question on what do I look for before joining a board, what steps I take. One is you need to know who your KMPs are. Who are your promoters? Right. You need to, I mean, today with the internet and social media, you can do a lot of research in terms of evaluating the reputation of the promoters who are in the company. Who are their external auditors? So I had a discussion with the external auditor in private about the accounting hygiene, the financial hygiene. Does the auditor have any concerns? What is their expectation from an audit committee? What is the expectation from the promoters, from the board? Are they open and receptive to receiving information and feedback? Because some of the feedback may not be what they want to hear. Are they receptive to feedback? Are they receptive to listening that, look, as a company on their journey, we were appointed prior to their IPO. We were appointed in April. So we worked with them through the IPO process, and then they finally listed in December. So there was a lot of information that we were sharing, but you had to share it in a manner that non-accountants, non-compliance professionals understand. And why it is important. It is not because SEBI has it as an LODR. It is because it helps the company. It helps the retail investor who doesn't have a seat at the table. So the board member is essentially representing the investors who do not have a seat at the table.
How are the promoters? Are they very receptive and they cooperate with you as an independent director?
Yes, so the promoters, to absolute credit, only one of them is the finance was looked after by a CA, but the rest of them were engineering. Very open, wanted to learn, understand from the board members what they need to do, without overburdening and without micromanaging, give them the right insights, explain why this is important, what kind of communication they should have with the retail investors. What do you communicate when you have results? What do you do when you don't meet expectations? A lot of their products go to the US. When they started in April, there was very little on the tariffs. Then came the tariffs. Then, especially on defense, the tariffs are quite substantial. What are the various ways in which they can continue to service their clients? It's an existential risk for them. And what do you cannot just keep it within the promoters. You're a listed company. You need to communicate that the risks have an impact on your revenue. But how do you communicate? What is the messaging? Who will communicate? So there was a lot of dry runs with the board where the promoters would test the message. And we were essentially the feedback, where we would brainstorm, and probably the questions from the board were much tougher. So they were much better prepared when they went in and addressed the investors, that their questions seemed very benign, given the rigorous questioning that they withstood from the board.
Mr. Ramprasad, as you were mentioning, the independent director's role also moves toward the accounting policies, revenue capturing. So how do you think how they bring their value to the board of directors? Do they need to be an expert in this?
Definitely, I think so there are two parts to this question. First part, I would take the lead from what Madam has said, that this is the infinite game. It is not a finite game. Building a business is an infinite game, and you are in for a long haul.
Correct.
As much as you're in for a long haul, you need to understand that it starts from a basic, as you rightly said, accounting hygiene. So accounting hygiene, so you need to have some understanding of accounting, and your board members, it's better to have one thorough, qualified chartered accountant who has gone through the rigor of what the entire accounting process is all about. So definitely the board, when you're looking at things like accounting policy, the core word that defines the entire thing is financial integrity of your accounting system, and how sanitized the results are when they go to the stakeholders. So that means, we look at accounting policies, we look at compliances. You write something in policy, but you don't comply, it won't work. So, basic thing like what is written in the notes to what is being complied with. Then critical accounting decisions, including revenue recognition. What is your 5-step process? How is it captured? Then, as you rightly mentioned, what is the management functioning with respect to estimates and valuations, things like impairment. All these things are all very broad judgmental, which can impact quarter on quarter. But you need to take a very long-term view. Any accounting view, I always tell people, never take a short-term view. Your quarter results will keep coming and going, but your long-term view cannot change. So please take decisions with long-term consensus. And I think your contingent liability disclosures. Primarily, we also look at how your accounts are presented and disclosed. How does your notes reflect? Is it hidden somewhere? All these things are, summoned. It's a total of various things which culminate in that. So to that extent, I think it's a big responsibility to the board members. And the board also should keep watching. What is the accounting culture I have in the company? Is it excessive risk-taking? Or is it extraordinary conservatism? Do I have a middle path? And this is very important for the board members to evaluate. And backing up all accounting decisions with an opinion may not be a great sign of a good management. You need to also...
How do you control the related party transactions? As an independent director, what is his role actually?
As far as RTPs is concerned, I think you have to be as transparent as you can in terms of the entire disclosure mechanism, including comparisons. What is the market rate? How you are paying? What are the benefits? And the total transparency, what must be given to the board members. I think that will define your RTP transaction. Today, in one of the companies, probably in RTP disclosure has not been given. The market price has come down by 40%. So today, the investor and the stakeholder community is giving importance to the substance of the form of the transaction, number one. Number two, it is also giving a lot of weightage to how prominent your disclosures are and how healthy your disclosures are. Yeah.
Dr. KS, are you there, sir?
Yes, very much I'm there.
Oh, yeah, we are able to
I
hear
will
you.
I will switch off the video so that the quality of my speech is clear. Basically, I have been
it's audible, sir. It is
Okay.
audible. It is audible.
I have been an independent director of the private sector bank, Karur Vaishya Bank, which is one of the most important stint I have played. In 2016, when I joined the board, it was much of a promoter-driven, promoter-controlled organization. However, in 2016 to 2024, in a period of 8 years, I have been able to and I have been instrumental in bringing about a transformation in the governance board process and everything that goes with the topic of management of the overall governance of the private sector bank. Banking company, as you may be aware, is a highly regulated sector. Public interest is always said to be on the liability side of the balance sheet of a bank. And regulations over a period have brought about several prescriptive requirements that expect independent directors to play a phenomenal transformational role. I had the credit of being the chairperson of Nomination and Remuneration Committee for almost like 6 years of 8 years of my tenure, 6 out of 8. And I had the credit of bringing about transformation in bringing chairperson to managing directors and several key managerial personals. Anticipatory risk governance was a very important topic. Expected credit loss was a very important topic. Succession planning was a very important topic. We have been able to bring about a big change, so much so that when I joined, the overall business was about 75,000 crore. And today we are proud to say it is more than 2 lakh crores. And the governance has improved several notches above. And today it is a well-oiled machine. And the entire board, when I left in 2024, of course, every one of the directors, I would have been instrumental in bringing them into the board. And today you can say everyone is independent except for the sake of regulations, the managing director is not considered to be independent director, and only one promoter director who is a well-experienced and qualified guy is sitting in the board. So the whole board is now consisting of, we don't need to say half of the board or majority of the whole board except this representative of promoter or the managing director is consisting of and driven by board, and the board strategies, business plans, directions, policies, charters and codes are thoroughly scrutinized and introduced and implemented at the level of board. And we have had plenty of separate independent director meeting wherein we were able to reflect on our thoughts, bring about several changes to transform and usher into a well-governed company. This is my very good experience in the last 8 years until 2024. Thank you.
And Doctor, how do you see the risk of an independent director where the company is not don't have much of a compliance? Say, for example, Section 138 cases. How do you see that?
Yeah, eternal vigilance is freedom forever. This is how we always say. And as Narayana Murthy was saying, good corporate governance is lying in running the affairs of the company in a sustainable manner, protecting the interests of the 2 C's, 2 E's and 2 S. That is your customers and creditors, employees and environment, society and stakeholders, shareholders or investors. Where in large corporate where everything is good, there may be sufficient processes, checks and balances, controls, which will take care of. That is, we call it in Rajinikanth language. The system is good, system will take care. Our system is not good. We need to attack the system.
we
We
can't
need to
hear you.
address the system.
Sir, we can't hear
So,
you.
I hope I am now audible.
Sir, I think we,
No,
Okay.
we are able to
Please,
hear.
I think there are some network issues, sir. Can you please?
Sir, you can
No, I
switch off
think,
the video, sir.
yeah.
Video can be switched off, sir. Yeah.
I have
I think-
switched it off. I was trying to quote our great actor Rajinikanth on talking about the system. When we say system is good, everything is good. If the system is not good, there is going to be problem. The role of independent director, even if he is a single person raising the voice and bringing about change, yes, that is going to transform. But don't expect anything to happen in day one. It will take its own time. Not that at the moment you join, you are going to. Initially, an independent director will be applying his mind on the areas where he has experience. But later on, the circle of knowledge about the company will slowly, gradually expand. Then he will be able to see the full picture. Then he will bring about several changes, and therefore there is no issue when he joins. There are some problems, there are some negatives, defaults and deficiencies. With 149 as well as 149 of the Companies Act as well as Regulation 25 provides sufficient immunity from liabilities specifically
You're breaking,
carved out for independent
Doctor.
directors. That is more than sufficient. I'm done.
Your voice is
Om
breaking,
Prakash.
doctor. Yeah, I'm able to hear.
Yeah, I was telling that 149 and Regulation 25
Okay.
provide sufficient protection to independent directors.
Okay.
Am I not clear?
Yeah.
I think BCIC central panel is frozen.
You can send line. I will read it.
Good.
Some network issue.
Are you able to hear us?
Oh, we can hear you, but it's breaking.
I'm just trying to connect it through my device. Hope I am
Okay,
audible now.
okay.
It's much
Am I
better,
audible
sir.
clearly?
Yeah,
I
it's
think
much
there's a
better.
bandwidth. I think there's a bandwidth issue.
Okay, I
Okay.
was trying to.
Madam, you were talking about balancing governance, then fiduciary role
correct.
of an independent director. As such, I feel management or the promoters don't encourage independent director to have a fiduciary role. So, can you explain on that?
Sure. See, the fiduciary role of director is enshrined in section 134 of the company, wherein every director of a company, where every director, which is a chairman on behalf of the board of directors, signs a director responsibility statement. And the director responsibility statement has very clear 5 items. First, it imposes an obligation on the directors to select the right accounting policies and standards for the company, to make appropriate estimates and judgments about the accounting standards, and for a listed company to establish proper internal controls. For other companies, both listed or unlisted, have enough safeguards built in order to safeguard the assets of the company and to prevent and detect frauds, to undertake a going concern assessment of the company, and to ensure that the company complies with all applicable laws and regulations. That is a fiduciary responsibility of every director, whether you are an independent director, promoter director, non-executive director, because it's a Companies Act requirement applicable to all directors. So that fiduciary responsibility is immutable and cannot be changed whether or not management wishes the directors to have a fiduciary responsibility or not. So it is the responsibility of every director to look at these 5 key items which are in the director responsibility statement. And that statement is enshrined in the director's report as a verbatim text. You cannot change that language. So I think when I was in consulting, and I still have a consulting practice as Fraudopedia, there are some foreign directors who have come and said that, look, I mean, especially American directors, they've had their lawyers look at this language and come back with riders and disclaimers. And I had to tell them that you cannot add anything because this is as per the act.
It's the Bible.
It's verbatim as a Bible. You cannot put disclaimers. Your only option is either you sign or you resign.
Stay away.
There are no other choices. And once management becomes aware of it, because the promoter director also has to sign the same language. He is bound by the same language. And it is a very onerous requirement on the directors to identify what accounting standards apply. Today, even if you are a practicing chartered accountant, Mr. Ramprasad can attest to it, it is so difficult to keep track of which accounting standards are getting formulated and what is applicable. I mean, the ICAI and the MCA are changing presentation of financial statements itself. So it is so difficult to even realize what accounting standards apply. How do you choose which accounting standards are applicable to your company? How do you then ensure that your entire finance department and your accounting system is gathering data and applying those accounting policies and recording these transactions in a proper manner? Who's going to audit those transactions? How do you ensure that those transactions are free from fraud, error, material misstatement? How do you even comply with all applicable laws? That's all the Act says. How do you even know what laws are applicable to you? It is not just the Companies Act. It is the Factories Act. It's the Workmen's Compensation Act. There are state regulations. There's the recent labor code which has come. There is Pollution Control Board. There is sustainability. So it is a humongous task on the directors, including a promoter director and independent director, to fulfill that fiduciary obligations. If that is not sufficient, you also have governance in AI, you have sustainability, you have ESG, you have BRSR, you have cyber. So the role of an independent director from a fiduciary perspective is substantial, both from a regulatory perspective and from market expectations. I mean, today, if you look at the SEBI chief or the NFRA chief, they expect directors to dissent, ask questions, not be just a, friendly chit chat. It's no longer a cozy club of friends, who are just having coffee, tea and samosa
Cashew nut.
and cashew nut and, and just approve, So you need to show, and you see a lot of independent directors. I'm very heartened that independent directors today are taking this role seriously, because you've seen in the last, and companies are equally taking the role seriously. I'll just give you 2 examples. One is Mr. Anil Chaudhary, who was the former chairman of SAIL India, and he was an independent director of KRBL, which is very popularly, they manufacture this India Gate basmati rice. It's a listed company. He was the chairman and he resigned from the board of KRBL. And before his resignation, everybody would just resign and say they're resigning for personal reasons. It was never known what the personal reasons were. You disagree with management, but you still say personal reasons. He was the first one where he articulated, he submitted a letter to the company where he explained he is resigning because the company had governance issues, minutes of the meetings were altered, export receivables were written off, compensation was given in a very arbitrary manner, The objects of the company were amended without the board's approval. So he listed specific items and said he can no longer continue in good faith as an independent director and meet the governance obligations imposed on him. The company first notified the exchange of his resignation, but never attached his letter.
Okay.
So the markets essentially had no reaction. They thought it's just any other independent director resigning for
Right.
personal reasons. 1 week later, they attached his letter. The share price dropped by 50%.
That is the impact.
That is the impact. And they had to engage a forensic accounting firm to investigate these allegations.
How did they attach that letter? They were asked to?
It's a requirement under SEBI rules that you have to attach the letter of resignation of the independent director when you notify the exchange.
That is correct. Initially, they didn't do that.
Initially, they only attached the first page.
That's what.
They did not
Somebody has
attach
asked.
the.
Somebody has asked.
But of course, Mr. Chaudhary knew that he had given a letter of
Yeah.
3
So
pages.
you would have insisted.
He would have insisted, or of course, the company also knew that it's better for them to attach the letter than for him to, say that he had resigned not for personal reasons. I mean, that is one example. There is another example of a company, I think it's called Amp Volt, if I'm not mistaken. There, the independent director equally made allegations of misgovernance and non-compliance. But in that case, the independent director, when he sent a mail to the chairman of the board, also copied other third parties. So the independent director was a lawyer. He was also advising, it turned out later that he was advising certain activist shareholders against the company. He copied external people in that email. The company now has filed a lawsuit against the independent director for violating confidentiality and copying others who are not part of the board and only copying the chairman. So today, the level of the environment today in the country is neither the company will take it lightly if there is a governance issue, nor will an independent director. So which is a good thing. It's moving in the right direction, to answer your question on whether everyone understands fiduciary obligations of independent directors.
So what I understand from your talk is accountability is very important.
Correct.
And to some extent, this should transform and the implementation should take place.
Correct.
And if at all you want to de-risk, you can write, communicate properly to the stakeholders.
Correct.
And coming to you, Mr. Ram Prasad, now as an independent director has all the accountability and responsibility, do you think they should be across the operations micromanaged so that the company compliance is done and they are also responsible to the various stakeholders, including employees, customers?
Very difficult for directors, honestly, to do a micromanagement own. So it is extremely impossible. It's impossible for them to get into granular details. So that is where, things like controls will come into place. We call it the management review of controls. The management review of controls is a very key function of the executive. The management review of controls is a big area where the management is expected to put monitoring controls in place for various aspects of the business operations, marketing, sales, HR, and filter out the exceptions and see how they are correcting the exceptions. And then that filtered report has to go to the board. And the board can evaluate the quality of the information flow to the board, how this quality of information is flowing, for which typically things are done is an independent auditor's testing of the management controls in place. There are key controls in place. Then they take samples, they test it, and then they find out how many controls have failed, how many controls have passed, and how all these things have been translated to the board. So I think and then whether is there any material weakness or significant deficiency which is highlighted, all these things. Those are, in my view, trigger points for the board to take action. But extremely difficult for the board to go granular, deal with executives. Because then it becomes, too much wastage of time, number one. Number two, the board will be assuming much more responsibility than what they have bargained for. As
It will be part of the subcommittees.
So it will be part of some committees, and the board can definitely engage in one-on-one discussions with the senior management, which is probably typically the CFO, the CEO, CO1, the CMO, the CHRO. That's how I have seen interactions, but definitely not granular to the extent that you are
I
asking.
think the demarcation line between management and board is also lost.
Yeah.
If I, as a board member,
Yes.
starts getting into operational roles.
Yeah.
That's management's responsibility. I am not the management. I am the board overseeing management.
Yeah.
So I can only provide supervision, insight, and oversight, but not actually go and execute and install controls and do any operational activity. So that line is very clear. But, it's under law, both in spirit and law, you must maintain that distance.
Yeah.
Without being involved in the operations, but yet we need to ask the question. So, for example, having a discussion with the internal auditor, having a private session without promoter directors present with external auditors, internal auditors, question them about whether auditors are getting information timely. What is the culture in the organization? Many times, on both of, I'm also on the board of RSB Transmissions, which is a automotive, but it's private investment. Even there, even though they're a private limited company, instituted the same governance as what would come from a listed company, where there is a private discussion with the auditors, where the audit committee, I'm the audit committee chair on both, where I specifically asked them that how is the information flow? During an audit, as you are auditors, are you getting the right set of information? Is it taking too long for the company to give you information? Or is information given to you multiple times and each time it supersedes what was sent earlier? Are you finding a lot of errors in the accounting system? If the auditor brings out multiple adjustments, that is a bad sign for the maturity of the finance function. Because the finance function, it has CAs, you should not be making basic accounting mistakes. You can have a discussion and debate on judgment, but not on accounting for transactions where there are errors on basic, accounting transactions. So how many audit adjustments are appearing? Same thing with internal audit. If they are identifying significant internal control deficiencies year after year, and the audit committee continues to approve the reports without taking management to task on why were these observations from 2025 still appearing, that is a problem for the audit committee. So you have to ask the management to fix those issues. And if it cannot be fixed, why is it not fixed? You need to convince the auditors that it requires a system change, or we need to move to, say, a new software. It's not integrated. So, but you have to come on a plan. If you're having your own customized IT platform, you need to deliver a plan. You cannot have the same observations coming in 2025 and 2026 and in 2024.
Okay. Coming to a general question in the interest of the participants, how lucrative is this career or this profession? Many people decide to, after an innings, they start, okay, let me do independent director, let me be on some boards. I've seen few succeed, few are cribbing. How lucrative it is it really worth? How the time is spent? What is the time share required from the perspective of a practicing independent director?
It is not lucrative. Especially if you are serious about governance and fiduciary responsibilities, it is not lucrative.
Could be a nuisance also.
It can turn out to be a nuisance, and you hope it doesn't turn out to be a bomb, on harming, you're not sitting on some hot potato which blasts when you're holding it. It takes a significant amount of time to review the financial statements, to review reports, to have the discussions with other board members.
It's not a happy retirement.
It is not a happy retirement because the risks are substantial. One, you have financial risks, because today, I'll give you simple examples. One of the companies I'm on the board of, they applied for KIADB land. KIADB requires the entire net worth of all the directors to be submitted.
Correct.
Even though the company is purchasing the land. So many of us as independent directors refuse to give the information. It's very intrusive personal information. Your PAN, your Aadhaar, your tax returns for the last 5 years, whether you've taken any borrowings, whether you have any property, whether you have any automobile or, immovable assets. We said, well, we are not the ones buying the land.
But it is a corporate action, right?
It is a corporate action, but the form requires the information.
Fair enough.
you have to give that information. Otherwise, you have to resign as an independent director. And it is fairly intrusive. And you don't want to jeopardize the company's chances. The company needs the land for its capex. And you cannot redact and give information. You have to give information, and your life is an open book. You have to be ready to have your life scrutinized in public. Today, if anything happens to the company, the first question for a long time used to be, where are the auditors? Today, in addition to where are the auditors, the question is, what were the board members doing? Were they attending the board meetings? Were they asking the right questions, or were they only collecting sitting fees? And sitting fees is mandated by the Companies Act. So it's the same fee. You can go lower, but cannot go higher. Then there is, of course, commission on profits that's left to the discretion of the company. Yeah. There is reputational risk. There is financial risks. There is also legal risks. Because anyone can file a lawsuit and name the independent directors.
So it could be a roller coaster, right?
Correct. You have to be open to all of that.
Delegates who are participating here can post their queries. The floor is open.
I will just add a few points, Om Prakash.
Next 10 minutes.
Om Prakash.
Yes, ma'am. Yes.
Can I add a few points?
Please,
sir.
Go ahead.
Please.
Yeah. See, the question which you have asked is a very wonderful question about lucrative or not. I would definitely say that the director's conduct within the board, within the organization is as important as his conduct outside the board and in the public life. This is number one. Number two, you would have heard about the Calcutta Children's Hospital fire case, where whole of the directors were the accused, including independent directors on the other side in a criminal negligence, gross negligence suit. Similarly, in IBC also, even in IBC era, in JP case, you would have known that 12 directors were under the prohibition for undertaking travel and alienation of their properties. So today, as was rightly said, not only the question is where are the auditors or where is the board member, it is about what the independent director has done. What is he doing? Is he not responsible? Is he not the person more supposed to be alert, vigilant and all? Therefore, today's position of an independent director is very, very difficult unless the person is thorough, confident and bold. In order to be confident and bold, a person has to understand the business of the company, its strategies, products, geography, customers, sector, provisions, regulations, the KMPs and customers. Everything that drives the business is supposed to be understood by him, because the board is always directed by certain regulatory requirements, certain business requirements. These two are the drivers of the board. And in that board, the expectation of the regulation or the principle of the regulation is that the board shall take a back seat and challenge the assumptions. For example, if a presentation is made on a project, it is necessary that the project is given to an external agency for evaluation. If you know the recent example of a Bombay dyeing case, the Bombay dyeing had always booked bulk sale of real estate, which is yet to be created in the name of SCAL, and that became the subject matter of a very serious order against independent directors as well as other directors and promoters in a whole-time director's decision. Of course, now it is subject matter of SAT, that is Securities Appellate Tribunal. So the issues are far too many, and sector regulated companies, particularly BFSI, if a person were to be undertaking the position, he has to be all the more cautious, and sometimes the remuneration could also be attractive, but definitely it cannot be said to be lucrative.
It's a very,
We are losing you. In the meantime, if you have any questions, the floor is open for question. The panelists are here to answer. Any questions, please? No questions now.
How will they know? They'll put it in the chat, or they'll show of hands, or because
Chat
they're all
box
on
is there.
mute.
Or you should unmute them.
No, they can unmute and they can talk.
Any questions from the participants?
The panelist can ask questions, I think.
Good
Now, the
evening.
last-
In KRBL matter, Adam was
please,
referring.
Please go ahead.
No, please go ahead, sir.
Yeah.
Good evening. Good evening. This
Good
is
evening.
Ramaswamy.
I'm
From Chennai.
Yeah.
NEFRA has issued a few circulars for the information of the directors and requiring them to take it forward in the meeting. Considering the detailed instructions and guidelines, how serious are the directors when they are taking these issues in the audit committee and board? Because normally most of the listed companies have their audit committee for a very short period of time, 1 or 2 hours or 3 hours maximum. How it is possible for the directors to evaluate all these points have been taken care, and how frequently they are having a discussion with the auditors? What is the way forward?
So the only thing worse than being an independent director is being an audit committee chair. There is nothing worse. I think today the audit committee has multiple responsibilities. I mean, I think both SEBI and NFRA keep imposing additional obligations, including whether acquisitions are done at fair value. I mean, I don't know how an audit committee member can evaluate whether a transaction has been done at fair value other than evaluating the report of a chartered accountant firm which the company would have engaged to determine fair value. Barring short of hiring another accounting firm at the company's expense to evaluate the work of another accounting firm, how will the audit committee member evaluate fair value? So, I mean, similar to that, the NFRA has these mandatory audit committee auditor interactions. I mean, those specific questions require a full day's audit committee. So
Yes.
most audit committee members and most auditors also do one presentation on exception basis. And as an audit committee, what I have seen is that the audit committee chair, at least, on both the companies that I am in, there is more than one chartered accountant. So that is helpful. So because many AC chair, especially in BFSI or telecom or aerospace, regulated industries, if you are a sole chartered accountant, they are very nervous and don't want to take on an AC chair role if they're the only chartered accountant in the audit committee or on the board, because the board essentially looks up to the AC chairs.
Correct.
And what I have seen work as a good practice is take the NFRA audit committee questions, you become familiar with them, which takes a lot of time offline before the actual meeting. And then when the auditor makes the presentation, if certain aspects are not covered, and knowing the company's business, if there are specific critical questions from the NFRA interactions, you ask those specific questions, given the time which is allotted. I mean, usually there is half a day for audit committee. 1 hour is not sufficient at all. You at least need 3-4 hours. And then you do the board presentation and, do the board meeting. Sometimes it is 1 day before, the audit committee happens a day before, and then board meeting.
Board meeting follows.
So then you have a little bit more time, but you have to read all of these papers beforehand, read the NFRA guidelines, and be ready with questions on an exception basis. That is the only way you can deal with these in the time that is allotted. Otherwise, the audit committee itself will take better part of a day to finish.
Yes.
Any other questions?
Good evening. I'm Meera
I will
Keshav. Am I audible?
One at a time,
Am
please.
I audible?
Yeah, you're audible.
I'm a chartered accountant, and I recently qualified for the independent directors exam. But after listening to ma'am and the panel, I'm so apprehensive about going ahead and becoming a part of the board. Any tips, ma'am? As it
No,
is,
I don't think you should be apprehensive. No, Meera, I don't think you should be apprehensive. I think the best is you start with promoters that
Yes.
And I think it's best to get your feet wet in a private company which is not listed. and not in a
Yes, ma'am.
BFSI. NBFC, BFSIs have significant regulatory challenges which will impact their business model itself. So so if you take a company where you know the promoters well, and I mean, if you're in Bangalore or Chennai or Pune, there are a lot of startups which are looking for very good independent directors who are certified. They need the inputs. As a chartered accountant, you can guide them with the kind of processes they need to install, the kind of controls that are required. So there are many startups which are, almost unicorn stage, looking for IPOs. They need a good independent director, so you can get your feet with private companies and you can take them on the journey to IPO, which will be both enriching for you and the company. It's a learning process for both of you.
Yeah, the
Thank
mantra
you.
Yeah, I
is
just
don't get chosen.
I will. Om Prakash, may I add one sentence here? As see, I was trying to tell this queryist that you can read my book, third edition on directors' duties and liabilities. But I am quickly reminded that you cannot swim by reading a book how to swim. Okay, so this is absolutely an experience, and I always tell these 3 points. One, put up the director's responsibility statement as a quotable quote in the boardroom. Number 2, directors are entitled to depend on external reports and management representation. So there is all that you need is go prepared, ask relevant questions, challenge the assumptions, and understand the perspective. Number 3 is very important, which I am going to tell now. When you are looking at the file at the boardroom, looking at it, asking questions, understanding, taking a decision, it is called business judgment. The business judgment rule will always protect you. A person in hindsight, somebody like an investigator, somebody like a forensic auditor, somebody like a governance expert, examining it later on may have different thoughts, different papers, different perspectives. That doesn't need to be bothering you. Business judgment rule will protect you on the table if you have applied your thought. And per se, you also have the protection of immunity given by Regulation 25 as well as Section 149. Therefore, I would advise the young person who has asked this question, having cleared the exam for ID, that you need not worry. The idea is prepare well and ask relevant questions, make your presence felt, be confident, mention if you find there is any contravention or there is something, ask for details, and that is the only thing you need to do. You have entitlement to rely on management representation and external reports. You are going to be protected by business judgment rule for decisions that you make on the table at that time. Thank you.
Thank you so much, the panel members and KSR, for very encouraging remarks. I'm sure I will, would want to continue my journey as an independent director. Let me make a beginning. Thank you. I might seek your advice at the time that I need to meet somebody and get, some kind of perspective. Thanks a lot.
Thank you, and wish you all the best.
Wish you all the best. Yes.
You can always use the community.
You try to choose your, board, then they're choosing you.
Correct.
Yeah. Understand that. Thank you very much.
It is a collective responsibility, each and every one of us, to improve the governance climate in the country for the betterment of the stakeholder environment and also in our journey towards Viksit Bharat 2047.
Correct.
I think that is a overarching goal that we should all have, and improve the governance by putting our thoughts together and improving and making companies better and better on a daily basis.
I think you should focus on MSME. That's enough.
Yes, thank you very much, sir. I will do that.
Any other questions? Okay. Thank you.
There is no question.
close it. Okay, if there are no questions, I think we can close the session. It was wonderful. And I thank all the panelists here who have come and shared their experiences and nuances of independent directors, their long-term gestures and the immediate requirement, how they should equip themselves, what to see ahead. And Dr. Kesa also mentioned about his book, which is going to come up. Thank you very much, sir, for joining us, though you are traveling. And I thank Vidya, Rajarao, who gave more importance to the forensic and other aspect, fiduciary capacity, and your Mr. Dr. Ram Prasad having mentioned about the process and accounting policies. So with this, I think we conclude this panel discussion. I would request Shyam to express the vote of thanks.
Good evening. I once again thank all our panelists for a wonderful presentation on independent director and their role. And also I thank all the participants for, I hope that you really enjoyed the session. I look forward for your participation in all our future events. And also please think again on our Golden Jubilee celebrations. I once again thank you all of you and have a pleasant evening. Thank you.
Thank you very much.
Thank you so much.
Thank you.
Thanks.
Thank you.